This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. As always, my name is Alex Perny, and today we're very pleased to welcome on Stephen Weisberg, lead attorney and founder of the W Tax Group. And I think we're all kind of familiar, especially in the context of this podcast and what we do professionally at Advanta IRA. It's not about how much you keep, it's about or how much you make, it's how much you keep. And especially when dealing with the litany of issues that can come up with the IRS, more often than not, we always have to pay the piper, right? They're going to get their pound of flesh somehow. And sometimes that can be a little bit more, or you can run into particular issues with amassing a considerable tax liability or tax debt. And while it's all well and good to say, hey, let's just, fork over a check to the IRS to get them off our back, sometimes the actual liability or the amount owed might be incongruous with what you actually should be fairly paying, or maybe there's some other mitigating factors that need to be examined with that. So today we're bringing on Stephen to kind of talk about, where these things can crop up from, what can be done about them, how the interaction with the IRS can go when it comes to facing down the path of a considerable tax liability, and what the taxpayers' remedies and cures are to kind of navigating that minefield. So again, Stephen, thank you very much for being on with us today. If you wouldn't mind, give us a bit of background about yourself and how you came to land in your position as an attorney dealing with taxes in the IRS.
Sure. So I initially was an attorney in the corporate world. I was working in corporate bankruptcy. I'm here locally in Detroit, or just outside of Detroit. So I actually became an attorney, practicing attorney in about 2008, which was an interesting time for everybody, and especially here in Detroit. But I was basically working with putting large suppliers through bankruptcy. And at the end of the day, what I noticed was, we'd work a year on these bankruptcies, and the big three, Ford, GM, and Chrysler would all be paid back in full in terms of how much they were owed. And then there'd be these mom and pop businesses and these small, vendors throughout Michigan and really throughout the country that would get paid like, 2 cents on the dollar. So at some point, I'm working long hours and working a lot of 6 days a week. And I was just like, I don't really want to work. So I can just pay back the car companies. So at some point I said, I got to do something else. And without getting too much into the story, I just said, I need to work with the mom and pop, smaller businesses or medium-sized businesses, but not the, Fortune 500 companies. I ultimately, found myself in the tax debt arena working under a prominent tax debt attorney. And I ultimately opened up my own shop about 10 years ago, around 2014.
Great. So what was kind of the core need in that market that you were looking to focus on? Again, I can certainly empathize, with not wanting to kind of, pad the coffers of the, people getting bailed out by the government. And to start out my career too, to give a little bit of, background, I started back in investing in about 2012 and just trying to scrape the REO bankrolls from the financial markets, from all the banks that foreclosed properties, and they were just, refusing to get off of these things and, dealing with the headache of trying to get these properties back out into the market. So I can empathize with you on not necessarily wanting to be beholden to those types of entities. But what was really kind of the core focus of what you were looking to help and fix with? Was it still kind of primarily focused in the bankruptcy area, or was it really kind of just from the rip focusing on the tax issues facing small and medium-sized business?
Yeah, it was right from the beginning. It was tax debt issues. Like I said, I wanted to help, the self-employed, the sole prop, the single member LLC, and I'm now helping some larger businesses as well. But, I wanted to focus on that specifically, and kind of, as things may or may not happen, you kind of fall into something, and that's just what I fell into. So yes, initially it was always tax debt issues, and it's income tax. It's individuals with income tax, it's businesses with income tax, but it's also the business owners who end up with income tax issues. And also, a lot of my clients now have payroll tax issues. The businesses have payroll tax issues where they were supposed to be, taking money out of their employees' checks and giving it to the IRS, but ultimately they used it to pay vendors or something like that, which doesn't go over real well. But they also get hit with what's called the trust fund recovery penalty, where the business owners owe the tax that personally, even though it's a business tax that they owe it personally. So that's where a lot of my clients come in. And really my niche, sadly in this industry, there's a lot of bad actors. Your clients and maybe yourself may have heard on the radio, these Optima taxes and Tax Defense Network, and they say, call us and you'll pay 10 cents on the dollar and all this crazy stuff. So there's a lot of bad actors and a lot of people get ripped off. And I came in and I said, look, I really want to help these types of people, and I want to be basically like not a fraud, which seems like a weird niche, but that was the reality of what was needed. And so that's what I came in, was to help small businesses and be not a fraud.
I think that's probably relatively salient points for many people to operate their lives under, is maybe just start with not being a fraud.
Right.
Don't be a jerk, don't be a fraud, and it'll probably solve majority of the issues you're going to run into in your personal and maybe professional life.
Exactly.
But the old adage of an ounce of prevention is worth a pound of cure. A lot of these things, again, are things that you probably see some commonalities and issues that people run into when it comes to accruing tax debts or other things that, again, you help to try to remedy or negotiate. So what are some of the things that, coming in from this, from the outside perspective, that you see a lot of happening that is, maybe easy, maybe isn't the right word to put it, but are kind of, easy enough to identify roadblocks that people can navigate, and what are some of the strategies that people can use to try to, prevent some of the easier things from occurring and becoming big problems?
Right. And you mentioned kind of easy, simplistic, and I would say the same thing about this, but easier said than done. Um, I have clients that are paycheck, they're W-2 and they have paycheck, but they have taxes taken out of their paycheck. They may have taken some money out of a retirement account or something to that effect, and that might have created a tax debt for them. But they're not having a lot of tax debt with their income. A lot of my clients have personal tax debt issues because either they're self-employed or they have income from other places where taxes are not taken out of it, right away. So first and foremost, if you're self-employed or if you have a law firm or a company where, an S corp, where the money is flowing towards you personally, but taxes aren't necessarily taken out of it, you've got to make sure to pay your quarterly taxes, each quarter, and timely, because that's where people get into trouble. They don't make their quarterly estimated payments, and they get to the end of the year and it's whatever, March of the next year, and they say, oh, well, I've got a $30,000 tax bill. I can't pay it. I don't have the money to do so. But if you're making those estimated payments every quarter, like you're supposed to, that gets taken care of. So you don't, at the end of the year, come to a huge tax bill and be like, oh, shoot, I don't know what to do now.
Yeah, and also to that too. I mean, there's not only the taxes, but also penalties for under, payment and under withholding that you can also be, subject to as well. So there's definitely a compounding factor to, that, especially on the self-employed side, and professionally in my arena too. I deal with a lot of self-employed individuals on the retirement plan side, between, things like SEP IRAs, 401ks and stuff. So I get exposed to professionally, maybe definitely not as much of the world that you do, but, seeing how these things can play out. Again, it's the thing that I like to kind of convey to my clients is that, while there is some stuff that you can just wait till the end of your tax filing fiscal year to do, when it comes to income tax specifically, if you are under the obligation to make a quarterly payment, do it. I've had some people personally ask me about that. I'm like, one, I'm not a tax advisor. I'm not going to tell you how much to do it, but it's like, should you do it? Yeah. It's, as much as we don't want to give the IRS a, interest-free loan if you're overpaying,
Right.
it's much better to have overpaid and claw that back than have them come knocking at your door saying, hey, you owe us a bunch of money.
Exactly. You said that
Um,
very well. That's
yeah,
exactly right.
it's exactly. So, from the perspective of, again, self-employed individuals, if you need to make quarterly tax payments, make those. But you said you also kind of branch into the the smaller business side of things. Now, what are some common issues that you see there? I know you mentioned payroll taxes kind of being one of them. Now, is that something that has kind of changed over the recent years with maybe some of the different changes to payroll tax legislation, or what are maybe some things that are kind of more specific to the smaller operating businesses, not just the self-employed sole prop people?
Yeah, I would say payroll tax is a big one, and it hasn't changed because it's kind of the same story since the beginning of time, where maybe revenue is short for some period of time, and you've got vendors who are saying, you need to pay us if you want us to keep working for you. And revenue is like I said, low, and then the business owner is saying to themselves, well, I don't know what to do. I don't have the revenue to pay my vendors, and I need my vendors to give me supplies or whatever it may be to keep operating. Where am I supposed to get money from? Now, the prudent thing would be, maybe get a short-term loan, borrow some money from somewhere, but not everyone does that. And you'd be surprised. It happens more often than you think, where the business owner, has employees, and of course, there's income tax that's taken out of the employees' checks. There's, Social Security. There's Medicaid or Medicare taxes that are taken out of employees' checks, which are taken out of the check by the business owner, and they're supposed to be deposited with the IRS right away. You're holding those fees or those taxes in trust. It's not your money. It's the employee's money. So, but instead of putting that into depositing with the IRS, what happens is business owners they use that money and then they pay their vendors who are telling them, hey, you got to pay us, or we're not going to supply you with the materials that you need. So, and what happens is the business owners say to themselves, okay, well, cash flow is low right now. I'm going to take the money from the payroll taxes, pay my vendors, and then ultimately, cash flow will even out and it'll be fine. And then I'll go back and I'll pay what I'm missing on the payroll side. Well, invariably, I mean, sometimes maybe that does happen, but invariably it doesn't happen a lot of times. And then they start these cascading payroll tax bills that they owe to the IRS, which is a big no-no with the IRS. Especially, I mentioned the part of it where you're taking money out of your employees' checks so it's not your money, it's their money, and you're just holding it in trust. So there's a payroll tax that's owed, and then there's this part which is called trust fund taxes, which are those funds that you're taking out of your employees' checks. So the business has a payroll tax that now. And then you, as the business owner, assuming you're the one who's dictating where the making the deposits with the IRS and where those employee taxes are going, you as the business owner are hit with what's called a trust fund recovery penalty, which is a penalty in name, but it's a tax. It's a personal tax that you owe as the business owner, even though it's a business payroll tax. So, business owners might not realize. They might say, okay, well, if worse comes to worse, my business has a payroll tax issue, we'll figure it out. Well, it's not that simple, because you as the business owner are then going to owe yourself personally, and you're going to have personal liability. Then you're going to have personal liability that you're going to have to pay on. The business is going to have liability that's going to have to pay on. It's all going to happen at the same time, and it's going to be a problem.
Now, is there any criminal aspect to that as well? If you're using funds that are, again, at the end of the day, they aren't yours. I mean, they are the employees' funds that they are electing to pay tax for. I mean, inherently, when you fill out your W-4, you give the information to your employer of, hey, here's how the rate at which I would like to withhold taxes from my pay to pay my taxes. So is it mainly just civil, or is it get to a point where this can become a criminal thing as well when it comes to the payroll obfuscation?
Yeah, certainly civil, but there's definitely, especially with the payroll, there is a criminal aspect to it. Now, I wouldn't say by any means that happens with every instance, but when you keep doing it over and over and over again and over and over and over again, and it becomes the big amounts, there is definitely a criminal aspect to this. And you certainly have to watch out for it, because, with income tax, the criminal side is more on the fraud. It's always about the fraud. So, if you just owe money to the IRS, the criminal aspect's probably not going to come in. If there's fraud involved, there might be a criminal aspect. And with the payroll tax and the trust fund penalty, that's fraud. I mean, the IRS effectively says you're stealing money, which in fact you are. You're stealing money from your employees, and that's something that they take very seriously. And so, yes, a criminal aspect does come into this.
Yeah, 'cause I mean, yeah, just like you said, at the end of the day, you are taking your employees' money and spending on other stuff other than the tax bill that you told them that you
Right.
were paying with it.
Right.
So yeah, I mean, that's
Oh, stealing. Stealing.
yeah,
Yeah.
a whole can of worms that people don't want to kind of delve down. So uh, let's back up a touch. Now, it's people again. It's from the sole prop and the self-employed individual, single member LLC, spousal operated companies. When it comes to not making quarterly tax payments, again, I think it's relatively easy for people to understand. Okay, yeah, you're not paying your taxes, so you're going to have a tax bill due. Now, again, I would say this. It's probably more common in the newer operating businesses. It's like, hey, I made money at the end of the year. I'll settle my tax bill, right? No, if you're new to this, you need to be paying on a quarterly basis. But uh, from the perspective of once these things kind of matriculate to the point where someone realizes, hey, like I have this large tax bill that I can't pay. What are some things, at least for the self-employed sole prop people, that where do you kind of step in? Like, how bad does it get till you've stepped in to try to help with this, and what are you trying to accomplish between the IRS and them?
Yeah, well, if you are going to owe money to the IRS and you just realize like I am going to owe, you want to, bring me in as soon as possible. The longer you wait, the more problems you're going to have. And also, the IRS is effectively the most powerful collections agency on the planet. I mean, that's what they are, but they have a lot of power. Most collection agencies, they've got all kind of rules and regulations about what they can do and can't do. Now, the IRS has some, whether they listen to it all the time is another story, but they have a lot of power to do things that other collection agencies wouldn't. So, leverage is important here. And if you come to me early or come to a tax attorney or CPA early, you have more leverage. If you wait till the end, your leverage is gone. But what we're looking at here is you owe taxes to the IRS. You then come to me and say, look, I owe taxes to the IRS. What are my options? And, I can then come in, look at how much you owe, look at the penalties, interest, make sure that you're in compliance, make sure you filed all of your returns. And then I can talk to you about your finances and we can discuss, what some potential resolutions might be.
Yeah, and I had a client many years ago that said something kind of funny that stuck with me was, to the point of the most powerful debt collection agency in the world. It's like they're the only ones in the United States that can carry a gun and collect your debt, right?
Yeah,
It's, that's the kind of thing. And then also another interesting fact about tax court is unlike criminal court where you're under the presumption of innocence, you're under the presumption of proving not guilt.
hmm
Lack of guilt in tax court. So
Yeah.
it's not a thing that you want to do. You're under the burden to prove your innocence, not for them to prove your guilt. That's just a whole
Yeah. When
not a thing
you
you want to be sitting there.
Yeah, when you start looking into the types of powers that the IRS has, it's actually kind of mind blowing. It's
Yeah.
wild how much power they have.
Yeah, it's crazy. But so again, they've come to you at this point. Now, it's and to your point again of kind of the bad actors out there. It's like, hey, we can settle this for pennies on the dollar and all this kind of stuff. What does the conversation look like with the IRS? Because, from a practical standpoint, you don't just get to owe, $30,000 to the IRS and then hire an attorney and them say, you know what, since you hired Steven, you owe us 5 grand, right? And
Right.
it's like that's
Right.
not how it works. So from this perspective of the self-employed individual sole prop people, what does that engagement kind of look like when you go to the IRS? You look at them, you say, okay, cool, like we've filed, we owe a bunch of money. The IRS is now kind of put on notice that you owe this money, and assuming that you haven't done anything like claiming $10 million worth of deductions and are trying to get a $500,000 return from them. Again, acting in good faith, you've put notice out. You're saying, hey, look, we owe this money. What are the steps from there? What do the negotiations look like, and what is kind of the ideal resolution for someone in this situation?
Yeah, well, I just wanted to comment on one thing you said. It's not like you hire an attorney and you owe $30,000 and then you owe $5,000. While that is true, if you try to call the IRS on your own, they might say, "Hey, pay us everything in 6 years, let's say, empty all of your bank accounts, sell your house, this, that, and the other thing. And then you bring an attorney in and, it's flipped on its head because the IRS isn't there to help you. They're trying to get as much money as they can as quickly as they can. And you certainly have certain rights, but they're not there to tell you what your options are, what resolutions you have, and what's the most favorable outcome for you. So to some extent, it could be. You owe 30, they're going to tell you owe it all, but maybe you don't. Now, I'm not saying everyone qualifies for that, but you kind of get my point. There's multiple resolutions here. There's certainly an installment agreement, which is, a payment plan over time. The IRS will generally give you, 6 years to pay your balance over time, but that's assuming you have 6 years left to pay your balance. The IRS has 10 years to collect from you. And if they don't collect within 10 years, the money that they haven't collected, goes by the wayside. So if you only have 3 years on what's called the statute of limitations, but 3 years on that 10-year time frame, the IRS, there's not 6 years for you to pay. So they're going to make you pay it in 3 years. Point being, they'll give you a 6-year payment plan, but there's all kinds of different circumstances that come into this where you might not be able to get 6 years. So the other options are, there might be a partial pay installment agreement where you pay the IRS over time on a monthly basis, but you never pay off the total amount of the debt. If you had to pay, making up numbers, $500 a month for a certain amount of time to pay off the debt, but we're able to get you into a partial pay installment agreement where you only pay $100 each month. Well, you're never going to pay off the debt, and then the remaining balance falls off the wayside. Now that's not everyone qualifies for that. It's based on your financials, it's based on the analysis, it's based on me presenting that to the IRS. But that's one of the resolutions that's available. Now, the big one that everyone loves is the offering compromise, where it's like you can resolve your tax debt for some portion of it, not the entire amount. So you owe $100,000, but you only pay them $10,000. And that's what these kind of bad actors out there like to promote. And then they're the ones on the radio saying, for 10% of what you owe, we can fix your tax debt. Even though they have they know nothing about your tax debt or about you, they say that they can fix it that way. So the offering compromise, and it is real. It's not like, these bad actors are making it up. It's real. It's just not everyone qualifies. So it is real that you could pay off your total debt owed for a portion of what you owe, but you have to qualify. So, I have to go through your financials. It's formulaic. There's arguments to be made. There's negotiations to be had. And I have to go through it and determine whether you actually qualify for a resolution where you're not paying off the total amount of the debt. But I need to see everything. I can't just tell you without seeing anything, hey, I'll resolve it for 20% and just hand me over your $15,000 and I'll do it. And then when it doesn't happen, I say, oh, sorry, it didn't happen, which is what happens with these Optimas and tax defense networks. I have to go through the analysis, go through the permutations and determine whether this is a viable option for you.
Sure. Now, are there certain levels or amounts that typically lend themselves to one, resolution or another, whether it's the payment plan or, the compromise kind of situation? Or again, is it just kind of impossible to answer where it's one of those things where you have to talk to them first? Or are there some kind of just general rules of saying, hey, look, if you had, didn't pay $15,000 in tax that, typically they'll only do a payment plan, or hey, if you owe 30 to 50, I've seen the compromise thing work out, or anything over this, it's kind of a negotiation. Are there some general rules that are just kind of outcomes that typically happen with certain amounts?
Not with regard to outcomes. It doesn't, the amount doesn't necessarily matter. It's all about the financials. It's all about the situation. It's all about the circumstances. It's all about your specific circumstances in terms of how much you owe, how many years you owe for and how long the statute of limitations is. But it's not based on the amount that you owe. They're not more keen to resolve your tax debt with an offer if you owe $15,000, rather than, $70,000. It's all about the circumstances and the financials.
Gotcha. What is the statute of limitation? Is it what, 7 years on stuff like this? Same for audits, or is it different?
It's 10 years from the date that the tax is assessed. So if you, let's say for 2024, it's 2025 now, you're going to file your return in April of 2025. That tax maybe gets assessed in, let's just say, June. It could be May, whatever. But let's just say the tax is assessed in June. You owed $10,000 and you get a letter that says you owe $10,000 in June. That's the date of assessment. And then they have 10 years from that date of assessment to collect from you. Now, there's certain things that will, what's called toll the statute, meaning like push that statute out further, where it can be longer than 10 years. And that's things like filing and offering compromise or filing for bankruptcy. Those are the big ones. So if you file for bankruptcy in the middle of those 10 years and your bankruptcy lasts a year, that 10 years is going to be extended to 11 years. So, you don't just get to, remove 1 year out of that statute just because you filed for bankruptcy.
Sure, and that makes sense. I mean, otherwise everyone would just be like, "All right, cool. I'm just going to try to file for bankruptcy
Right.
as many times."
Right. Yeah, and you'd be surprised. People think that, they can do that kind of stuff.
It's like for the
The
next
IRS,
decade, I'm going to be in bankruptcy court every single week.
right, right. The
Which I
IRS
mean,
figured that out.
yeah, and just like with some stuff I deal with too, it's like the IRS has figured some things out with like tax shelters owning operational businesses and things like that. Where I get asked like, well, why can't my retirement plan just own a laundromat? I'm like, well, it could, but you're gonna get real familiar with what a 37% trust tax rate looks like on everything over
Right,
15 grand.
right,
Um,
exactly,
so
exactly.
yeah, it's always interesting to see where kind of people's thought processes lie on that kind of thing.
Yeah.
Now, from the perspective, and then we're kind of moving into the business side of things, is there any kind of evidence or anecdotal or otherwise that would suggest that if you do owe taxes like this, again, and to the sole prop side of things, that would indicate if you go and have this kind of negotiation, whether it's a payment plan or offer and compromise, that it would open you up to an additional audit risk in the future, or any kind of thoughts on that?
Short answer is no. It really does not matter. And I have had that question many times. But the short answer is no, it's not going to change your audit risk.
Yeah, and again, people, I get asked that question. I was like, will this be an audit risk? I'm like, if you can figure out what the IRS is thinking on any given day, then
Well,
you
good
let me
point.
know.
Yeah, good point.
There are certain things that I know for a fact that there have been published indications of things being
Yeah,
a higher audit risk. But in
correct.
general, with a lot of things, like no one knows, right?
Right.
Um,
Yeah, a lot of it's random, and you're right. There's specific things that have been researched, and there's been analyses where does create an audit risk. But most things, it's kind of luck of the draw, to be honest. They're
yeah,
not well enough equipped to have too much clear guidance, and this means that, and that means this. It's kind of luck of the draw.
Yeah, and to the other point I told people, I'm like, look, like in the developed world, we have basically the lowest audit rate of any developed world in the nation. As far as individual tax filers, I mean, businesses are different, but individual tax filers is something, it's like less than
Yeah,
2% per year get audited.
yeah,
170 million tax filers in the U.S. Like,
very low.
can you get audited? Sure, anyone can.
Yeah,
Will you get audited? Buy a lottery ticket, see which one happens first, right?
right, right.
And
Yeah,
your
yeah,
odds are
yeah,
similar.
yeah.
So yeah, so again, it sounds like kind of the genesis of why individuals get there, is mainly just for either a lack of planning, starting new businesses, or probably cash flow problems on like the individual, like sole proprietor side of things, which it's understandable. Tax. If you make 3 grand in a month in your self-employed business, and then you have to go buy materials, put diesel in your truck, all that kind of stuff, it's like you might not have the ability to get your plumbing supply contractor to drop off your pipe if you didn't pay them, as opposed to paying your taxes. So,
Right,
which one is the lesser of the two evils? I don't know. I'm not, I'm
right,
not
right,
going to put
right.
out there what I think about the
Unclear,
IRS.
yeah.
Um, But anyways, again, I think we kind of well covered that. Now let's move into kind of the smaller operational business side of things. Let's say you have some employees now. You got some rank and files, past just you and your spouse and a bookkeeper. You're out there, you have, let's say 10, 15, 20 employees. So let's kind of look at that. I do want to kind of get more involved in the payroll side of things too. But when it comes to how these tax bills get accumulated, is the primary one again just the payroll side of things, or where would other things that would compound tax debt accumulation from the business side?
Well, I mean, there's certainly still business income tax debt. Um, if you've got an S corporation, though, right, the taxes are flowing towards you personally, so you're probably not going to have a huge issue there. Um, with a C corp, and bigger businesses, there's an income tax issue, and that is the same as any other income tax issue. You've got certain rules you got to play by in terms of paying off your taxes, and if you don't do it, you're going to have an income tax balance. But like I said, sole props, S corps, that's all going to flow personally.
Yeah. And when it comes to the accumulation of these, especially, let's say you're filing it as C corp, you want to be taxed at the corporate tax level. Whether that's good, bad, or indifferent, no one should pass judgment. That's how you personally planning for things. But is there really kind of any different like engagement or negotiating tactics that you use more on the business side of things? Like if they had been, let's say, underpaying or lack thereof paying their corporate taxes on a quarterly basis, what does that conversation look like with a client versus the sole prop?
Yeah, well, it's interesting because the discussion is pretty much the same in terms of like what you're looking at. Like you're looking like with the sole prop individual, you're looking at personal finances the financials of the sole prop or an S corp, and it's the same with a larger business or a C corp. You're looking at the financials of the business to try to come up with a way to um, pay back the IRS in some shape or form that the IRS will agree to. But it's the same thing. You're looking at the financials of the business. You're talking to the IRS about what's realistic. You're looking at the formulas the IRS has, the standards that the IRS has, and you're taking everything that the IRS uses with that Internal Revenue Manual and you're applying it to the business that you're working with. But again, you're looking at the financials of the business and taking into account the circumstances, the situation, to negotiate a resolution.
Now, so again, the resolutions again being pretty much the same, like the offering compromise payment plans and the like. But let's say you wholly disagree with them. Is the only remedy then to sue the IRS in tax court? Or if you have a disagreement on the amount owed, what are kind of some steps that you can take to try to get them to see the light? Or is it really just kind of that nuclear option of having to sue them in tax court?
No, I mean, if you get assessed a tax and you disagree with it, you can respond. You have the opportunity to respond, and then you have a certain amount of days, 90 days to then go to tax court. And it's not like you have to go out, and like sue them and make it into when you think of like a lawsuit, or you have to like bring all the big guns in and file the suit and all this stuff. It doesn't necessarily have to be like that. You can discuss, you can kind of reject what they've said you owe the assessed amount, and then have correspondence that goes back and forth with them to try to resolve the balance. But yeah, you have 90 days then to file a suit or at least a petition in tax court to then try to resolve the differences between yourself of what you think it is and what the IRS thinks it is. And you know, the IRS has an appeals option outside of tax court, but also in tax court. A lot of these things that where you petition the tax court, a lot of it goes to within tax court. The attorney will say, "Okay, I see what you're saying. We're saying something different. I'm going to send you to appeals first." And so then you kind of negotiate with appeals about what you think is happening, and citing tax law and citing court cases, and obviously looking at your own financials, you're discussing with them what the best outcome is, and that negotiation goes through them first. If you can't come up with a negotiation or a resolution with them, then it goes back to the attorneys in tax court. But I don't know what the figure is. I'd like to say like 90%, and it could be off. It could be far off. But the point is, the vast majority of these tax court petitions are resolved in appeals within the tax court.
Yeah, and that kind of goes back to the simple fact that attorneys are expensive, right? The government just doesn't get to, not pay their attorneys and the judges and everything. If you're arguing over, let's say, $40,000 of, what you feel, let's say they say you owe 70 and you think, hey, it really should be 40. It doesn't take very long for them to rack up enough bills and billing hours to say, this is just, what's the point? Let's, maybe we won't just give you the discount you're looking for, but, it's not worth going to it. And just like insurance and, personal tort in the United States, like stuff settles, right? Rarely do personal judgments get pushed out through a jury trial or something, right?
Yeah, it's the same as anything else, right? Any other lawsuit, any other, legal dispute, I guess you just said it. The IRS has to pay their attorneys. You have to pay your attorneys. You'd much rather come to a resolution before it goes to a full-blown trial.
Yeah, exactly. So again, that's, just kind of putting it out there of, because just because the IRS says you owe something doesn't mean that they're right. They are fallible. Right. They might be off.
They're wrong all the time. So.
Yeah. Again, there's human beings on the other end of this whole thing. It's not just Skynet telling you owe something. There's, fallibility in this whole process.
Yeah.
So, you've come down to that, and, the businesses are looking at this. Now, you mentioned bankruptcy earlier, and, a general construct, of the corporate structure in the United States, at least, is that, these things are separate entities to and from individuals. So is there, some type of remedy to where, bankruptcy from a corporate level would kind of evaporate tax liability, or how sticky do these things get to the owners or the shareholders of an entity for tax debt on the corporate side of things?
Yeah, so it's a good question. Now, I'm not a bankruptcy attorney, so I can't give legal advice on that. And I think you'd be better served asking a bankruptcy attorney on that, because I don't have the background. I mean, I think certainly there are opportunities to file for bankruptcy for sure. Where it makes more sense, on the corporate side and on the individual side, where it makes more sense just to file for bankruptcy. Now, taxes, I will say, taxes do have a special priority in bankruptcy. It's not just like a general unsecured claim where, it'll just get knocked off to the side. It has a special priority in the waterfall of who gets paid. So it's not going to go anywhere, at least not anywhere quickly. But there certainly are times where bankruptcy makes more sense, rather than going through the tax, what I would call resolution or defense option.
No, and that's a perfectly fair answer. Just like in my industry, in the tax qualified plans and ERISA and things like that, there's things I don't know or can't answer, and certainly in the legal realm, there's a reason why you don't just have an attorney that does everything, just like you don't have a doctor that does everything. Like, you don't go to your podiatrist for a heart valve replacement, right?
Exactly, and I have good relationships with a lot of bankruptcy attorneys, and that's why I do. So I go to them. I ask them, does it make more sense for this client to come to you and to resolve things through bankruptcy? And I rely on their expertise.
Yeah, absolutely. So again, stepping back a little bit again, so there's the basic kind of things, and I'm assuming that the petition for the actual amounts can be kind of applied the similar fashion to the corporate side of things or small business side of things as to the self-employed individual, right? Like, if you disagree, you can petition similar fashions. The operations are going to change a little bit. But when it comes to, again, on the business side of things, what are some of the biggest missteps that people take? Obviously, besides not paying your taxes, which is what you got, tripped down this path for in the first place. But again, what are some of the kind of missteps that people do? Is it kind of a general, thought, or just kind of like feeling that they have of like, hey, here's my only option, or hey, I don't want to do this, and they kind of don't see the forest through the trees of what their options are? Or again, just like in general, dealing with the business clients, what are some of the things that you have to kind of educate or, re-educate people on when it comes to navigating this process?
Yeah, to be honest, you kind of hit the nail on the head. I mean, look, it's someone needs to be in control of the business, or advising the business about the decisions they make. At the end of the day, it comes down to whether or not you make the appropriate decisions so that you can pay your tax debt. And so you need to be aware of that and make sure that you're making the appropriate payments to the IRS so that you can pay your tax debt. And like we talked about with payroll tax, you know, when you're thinking about paying your vendor, instead of paying the payroll tax, you know, either you've got to decide or your advisor needs to tell you, well, no, why not, let's try to get a loan. Let's try to do some other creative idea of how to get money instead of doing payroll, because you know that's the worst option. So I wouldn't say there's something specific that people run into. It's just everyday decisions by business owners, every day, you know, like on the micro scale and on a macro scale, about what they do with their money, and then it comes down to whether or not they're going to be paying their taxes appropriately or not.
For sure. And this is something that I'm not necessarily familiar with because I live in the great state of Florida with no state income tax.
Yeah, nice.
But yeah, one of the seven, right? Got to stay strong with it. Maybe some
Yeah,
other people will pick up some habits from Florida. Not too many, I promise you. Just no income tax would be a good one.
yeah, that's a good.
But when it comes to, again, then you're dealing with two different regulatory agencies. You know, the IRS is a federal agency, and the tax collecting agencies are independent. You know, there's 50 of them in the United States. So when it comes to looking at this, do you often see like, and I know Michigan has state income tax. Would you look at, do they often kind of come in pairs when you have clients with state income tax that aren't paying that? And how does that kind of go from the strategy standpoint? Is like negotiating with a state wholly different, or is it kind of all lumped into the same? Like, what does it look like if you have unpaid state taxes as well?
Yeah, and that's a good question. They do come in pairs because generally, if you owe the IRS, you're going to owe the state as well. But you always want to resolve the state issue first, because when you're negotiating with the IRS and they're looking at your financials and you're presenting really the most bleak picture as possible, you're allowed to use payments you're making to the state for tax debt as an expense when you're presenting your financials to the IRS. So, you know, that's an extra expense that you can say, well, hey, I'm making payments to the state for tax debt. I need to make that payment, and the IRS will allow that as an expense. So you always want to negotiate with the state first, resolve that underlying balance, come up, if it's a payment plan or whatever it is, come up with a resolution there so you can say to the IRS, look, I've got to pay the state this, and you need to take that into consideration when we're talking about what my resolution is going to be with you, the IRS.
No, absolutely great. It's just one of those things where when I talk about taxes living in Florida my whole life, I always forget that, you got
Yeah,
43 other states that do try to claw part of your paycheck. So we
yeah,
gotta make sure we look at everyone and not just
yeah,
kind of sit here and laugh. But
yeah.
yeah, it's definitely a good point to kind of bring up. And I assume the same kind of thing applies for like unpaid sales taxes as well. If you're operating some type of point of transaction business, all that stuff with the state, you're basically saying, hey, it's a general good rule of thumb to try to get that looked at first, so that way when you go to the IRS, you can have a little bit of a better leg to stand on of saying, hey, look, like let's make sure we are fair in our assessment of everything, right?
Right, exactly. And sometimes you don't have that opportunity. Sometimes, if the IRS, if you waited too long and the IRS is hovering over you and saying we got a problem here, you can simultaneously work with the state. But the IRS certainly isn't going to wait around and say, hey, I know you've got this state balance and you've got to resolve it and you're going to have payments to them and yada yada yada. They're not going to do that. They're trying to get whatever they can, as much money as they can, as quickly as possible. They're not going to wait around for you to resolve it with the state. So, and that's another reason why you want to be proactive, and you don't want to wait around to get someone like myself or any other tax professional involved, is because like a situation like this, you want to get the state resolved first so you can use those expenses when you're negotiating with the IRS. Don't wait for the IRS to be right on top of you so that you can't even get to the state first, and you can't use whatever payments you're ultimately going to have to make to the state as part of your IRS resolution.
Yeah, for sure. I think these are all kind of great points to kind of really kind of culminate our conversation. The last thing I'd like to ask though is, certainly what you do costs money, and any, attorneys are many things, but typically people would never use the word cheap in in that kind of scenario. And there, again, I always say there's definitely a value to anything you're doing.
Exactly.
We charge fees for our services, attorneys charge fees for their services
Right.
because there's a value to be created. There's a need, especially if you're dealing with the IRS, having proper representation and not just relying on, the audit protection from H&R Block or TurboTax.
Exactly.
Like, let's be honest. Like, there's a reason that we want to pay for good service, but there's a point to probably where like tax liabilities, don't always make sense to engage it. Like if the IRS says, "Hey, you owed you didn't pay us $1,000, right?"
Yeah.
Like, if you're billing out at $200 an hour, like, it takes you 3 hours to look at something and figure it out. Okay, maybe just pay that. When do you
Mhm.
kind of see that people start getting the most value, or like some certain things, and maybe it might be a lower value, like if you're not paying, if you're keeping your payroll tax back, like maybe there are some like issues where like, hey, maybe even if it is like a $3,000 or $4,000 liability, making sure we have representation to make sure you don't cause bigger issues. But where do you kind of find that your services are best felt for people?
Yeah, I usually say about $10,000. And by the way, I charge on a flat fee basis. I personally do not use an hourly basis. I use a flat fee. And it depends how much you owe in terms of what that flat fee is going to be. Not only because, I mean, not, or I shouldn't say not only, but not just because the amount that you owe is different, but there's different things to consider at different amounts. There's different strategies. The IRS is looking much harder into a $70,000, $150,000 bill than a $11,000 bill. So anyway, I use a flat fee, but $10,000 is the number that I'm usually looking at to where I think it makes sense.
Okay, good. Again, it's just always good to know because people, they get something from the IRS and they think, oh my God, this is going to be so many different things. And again, it's, what I try to tell people, at least on the professional side of what I do, is that yes, the IRS is scary. We should give them a wide berth and let's not try not to get in front of that ship unless,
Yeah.
something else is happening and you can't avoid it.
Yeah.
But at the end of the day, there's humans on the other end of this. For the most part, if it's something that you can stomach, again, paying them and being done with it probably isn't the worst idea, but make sure you have good advice, especially when things start getting more expensive, is very, very important. So again, that I think kind of wraps up a nice picture of what happens to people when they don't pay their taxes and what some of the remedies are and the paths forward for people. If someone is going through this kind of issue or think they might, or they, want to get ahead of something, what's the best way that people can reach out to you for your professional services?
Sure. Well, I can give you my number real quickly. I mean, it's a direct number straight to me. Of course, I have an organization around me, but I'll give you my direct number. It's 248-971-0885. That's 248-971-0885. But I'm very active on LinkedIn. My name again is Stephen A. Weisberg. And then for websites, as I said, or as you said, actually, I am the lead attorney and founder of the W Tax Group. And if you want to go to our website, it's wtaxattorney, spelled out, .com. But you can also go to I have a separate website just for myself personally, and that all goes back to the W Tax Group. But my other website is Weisberg.tax, and Weisberg is Weisberg.tax.
All right. Fantastic. Well, Stephen, really appreciate you being on with us today. Our time is our most valuable asset that we all have. So thanks for taking a time out to spend a few of those minutes with us today. With that said, again, my name is Alex Perny. This has been the Alternative Investing Advantage podcast. Thanks for joining in. We'll see you on the next one.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.